Hey everyone, welcome back to Corporate Decoder. Today, first BanCorp. FBP just filed an amendment to its current report on Form 8, and I am seeing new details on executive compensation and consulting deals that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. We're diving into the specifics of a past CFO's new role and the financial arrangements for the incoming one. So, first BanCorp is filing an update, an amendment to a previous report to give us more juicy details about who is doing what and for how much. This isn't just a simple update, it is adding crucial information about their top financial officers. It seems like a move to fully disclose the transition and new arrangements. This part of the filing is all about changes in leadership and what those changes mean financially for the company and the executives involved. Specifically, it details the exit of their chief financial officer, Orlando Berges, and the welcoming of the new CFO, said Ortiz. Let's break down what happens to Orlando Berges. He is not just disappearing. Instead of a full retirement, he is transitioning into a consulting role. This is a pretty common practice for senior executives. It allows the company to retain valuable institutional knowledge and expertise without the full-time commitment of being an officer. So, on the 30th of June, Orlando Berges inked a deal to be a consultant for First BanCorp. This agreement runs until the end of 2026. The company is essentially tapping into his experience for specific advice. Here is the money part for Mr. Berges. He gets paid $300 an hour for his consulting work. This is on an as-needed basis, meaning he'll only work and get paid when the company specifically requests his expertise. This is a flexible arrangement for both sides. It's not a huge lump sum, but it's a steady income stream for his services and maintains a connection for the company. The scope of his consulting is quite broad. He'll be helping out with tricky past issues, financial and accounting questions, big picture strategy, and even helping with audits and regulatory checks. This really highlights how much the company values his deep understanding of their operations and the financial landscape. Like most of these agreements, there are non-disclosure and non-competition clauses. He can't spill the company's secrets, and for a period after his consulting ends, he can't go after their clients or employees or compete directly against them. This is standard practice to protect the company's interests once a senior executive moves on. Now let's shift gears to the new guy, said Ortiz, the incoming chief financial officer. This section lays out the financial package he is receiving to take on this critical role. Said Ortiz officially starts his new job on July 1st and has got a 1-year employment contract to begin with. The good news is, it automatically renews each year unless either he or the company decides to end it. This suggests a belief in a stable, long-term relationship. His base salary is set at a very solid $475,000 per year. On top of that, he has the potential to earn an annual bonus. This bonus will be tied to how well he achieves specific business goals. This is a performance-based incentive aligning his pay with the company's success for a CFO role in a company of this size. This salary is competitive. He also gets the standard executive benefits. This typically includes things like health insurance, retirement plans, and other perks that come with a high-level position. This is a crucial part of the contract, often called a golden parachute, if the company's board fires him without a good reason. And this happens within 2 years after a change in control of the company, meaning a new owner or a significant shift in leadership. He gets a substantial payout. This payout is 2 times his base salary, plus 2 times his average bonus from the 2 years before he was let go, and the value of other benefits. This is designed to protect him financially if his job security is jeopardized by a major company event like a takeover. There is also a severance clause for termination without cause, but outside of a change in control scenario. If he is let go without good reason during his employment, he'll receive his current base salary plus the average cash bonus from the previous 2 years. This is a bit less generous than the change in control severance, but still a significant safety net. This section defines what exactly counts as a change of control for the purpose of his contract. It's pretty standard stuff if someone buys a significant chunk of the company's voting stock, enough to influence or control the board of directors, or if the board members themselves significantly change due to a merger or acquisition. That is a change of control. This keeps things clear and prevents ambiguity if such events were to occur. This is where they list all the supporting documents for this filing. This is the actual contract for Orlando Berges' consulting work, which is now officially part of the public record. We can see the details of his deal here. And this is the digital file for the cover page, making the data machine readable for easier analysis by investors and regulators. This is the formal sign-off section, where a company representative confirms the accuracy of the filing. Here we see the signatory, Sarah Alvarez, who is the Executive Vice President and General Counsel, officially signing off on this amended report on the 1st of July 2026 for First BanCorp. Overall, this filing gives us a clear picture of First BanCorp's executive transition. The move to a consulting role for the former CFO is a smart way to retain expertise. The compensation package for the new CFO, said Ortiz, appears competitive and includes reasonable severance protections, which is important for attracting top talent. The definition of change of control is pretty standard, but it is there to ensure clarity in those significant company events. My biggest concern is always how these executive changes correlate with the company's financial health. While the details in this filing are about compensation and consulting, they stem from the underlying business operations and leadership effectiveness. We are seeing a regional bank, First BanCorp, FBP, with a market cap of around $4.1 billion. Their P/E ratio is about 11.7, which suggests their stock price is trading at a reasonable level compared to their earnings. They have a solid base of institutional investors like BlackRock and Vanguard. However, the transition of leadership is always a moment to watch for any potential impact on strategy or financial execution. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please hit the like button, subscribe for more, and join our Discord community linked below.